CFD trading and share dealing. What's the difference? Well, with CFD trading, you speculate on the price of an asset without taking ownership of it. You can go long or short, meaning you can trade on falling markets as well as those that are rising. With share dealing, you buy and sell physical stocks and can only deal on rising prices. But which markets are available to you? CFD trading gives you the option to trade more than 15,000 markets, including forex, shares, indices, commodities, and cryptocurrencies. Whereas with share dealing, you can only buy shares and ETFs. Next, leverage. If you decide to trade CFDs, you only need to put up a small percentage of the trade to gain a full exposure. While this magnifies profits, it also means that losses can exceed your initial deposit on a given position. If you choose share dealing, you'll need to pay the full cost of your position up front, but can limit your risk to your initial outlay. There's also a difference in market hours. With CFDs, you have the advantage of trading around the clock on a number of markets, while share dealing can only be done during stock exchange opening hours. Then there's tax. With CFD trading, you don't pay stamp duty, and losses can be offset against profits for tax purposes. With share dealing, you do pay stamp duty and capital gains tax, except on profits made from trades using a stocks and shares ISA or SIP. Lastly, CFD traders don't have any stockholder privileges because they don't own any shares. Share dealers can receive dividends from stocks and have voting rights on major company issues because they own the physical shares. For CFD traders, dividend payments have no effect because positions are adjusted to ensure there's no material loss or gain. To start trading CFDs or dealing shares, open an IG account today.